Welcome back to my YouTube channel. And in today's lesson, I'm going to be doing a market analysis breakdown and how to take entries and also how to predict the direction of the market. Right, so usually I'm going to start with a high time frame, which is going to be the daily time frame, and I'm just looking to see what the market is presenting me. Right, so on the daily time frame, I clearly see an uptrend formation, right, which is basically market going up right here, right, retracing to the side, going back up, retracing, going back up, retracing, right? So my next target is probably going to be a swing move, what, to the upside. We have an impulse, we have a correction, an impulse, a correction, an impulse, and a correction, right? So the next thing we'll be doing is we'll be expecting what market to go back up. Also on a weekly time frame, right, we see a very nice resistance area around this side where market is sort of like respecting, right? So we see a very nice resistance area at this side, right? Market is respecting this other block that we have here. Market came down to the side, so we are looking to take entries to the upside, right? Since market is making highs, right? And then market is retracing. This is just a correction. This is an impulse. This is a correction. This is an impulse. This is a correction. So we expect an impulse, right? So since I know where the market is going to go next, I'm going to go to a lower time frame to look for entries in the market. So basically what I'm doing on the daily time frame is I'm finding key levels where market is not going up, or key levels where market is more likely to retrace massively, right? And the key level is going to be around this side, which is my demand area, right? Once I'm able to identify my demand area, I see market coming back to this demand area, right, creating a very strong support level at this side. So I'm expecting market to go up, but I can't take my entry right here because this stop loss is going to be very huge. So the best thing to do is to go to a lower time frame to find my entries, right? So I'm going to go to the 4-hour time frame. On the 4-hour time frame, I see a very nice move that market made, right? Now let's use market structure to identify the directional move of this market or this pair, right? What we can really see is that we see market going all the way up to this side, right, creating this high point. Now market came all the way to this side, right, and then market also came to this side, market also came to this side, right? Now what I'm seeing is I'm seeing market making what, lows and highs and lows, right? There's a downtrend move. Now at this side we also have the same formation, right? We have a low, a high, a low, a high, right? We could have potential low right from this point, right? But since market is on a very key level, I'm expecting price to do what, to go back up or give me some kind of reversal pattern before I take my entry to the upside, because market is currently what, in a downtrend, and market is also on a key level. Now how do we take our entries on this? We identify the high, right, the low, which is this, the high, the low, and then our high, right? So this side is going to be our recent high. This is going to be what, our recent low. Now what I'm going to be doing with this is, since I have a downtrend, I'm trying to identify what, a reversal pattern. So what I'm going to be doing is I'm just going to put a line at this side, right? Since this is my last high, I'm going to put a line at this side since this is my last what, low. Within this structure, I see market making what, an impulse move to the upside, a correction, and an impulse move to the upside, right? And market is coming down. So if I'm expecting market to go back up, then I'm expecting market to respect this level to be what, my support level. So I'm going to use this level as what, as my support level, where I'll be expecting market to go up from this level, right? This is also the stop loss of this is also going to be pretty huge, not really huge, but I like to take entries with stop loss being 10 pips or 20 pips max. So what I'm going to do is I'm going to go to a lower time frame to refine my entries. I'm going to go to the 1-hour time frame and see how structure is being formed on a 1 hour time frame. So on the 1 hour time frame, I can adjust this and then bring it to this side, right? So around this side, around this section that I have right here, I'm looking to take what? A buy trade. Now, how do I take a buy trade? This is where we also use another market structure inside what? A market structure. So basically what we did previously is we were identifying what the highs and lows. We had this high, right? We had this low, we had this high, we had this low, right? Now, on a lower time frame like the 5 minute time frame, we will see something happening, actually happening within this. Now when we had this low, we had this high, right? We had another high to this point, we had a retracement to this side. Now at this side we had a break of structure. Market basically broke this, right? And then since market broke this, I'm looking for an area that led to that breakout. So all I do is take my box and then draw the zone that led to that breakout, which is going to be what? This zone that I have right here. So I'm going to be expecting market to what? Retrace out of this what? Zone. Now within this zone, I'm also looking to take what? I'm still looking to take a buy trade. So this can actually be my entry, but if I miss this entry, then I'm going to be looking to take another entry, and I'm going to be looking to see which structure points got broken, right? And I can see from this side that we had this high, this low. Market came to this side, we traced back to this side and broke the structure right here, right? So I'm going to be looking for a structure that led to that breakout. So it's probably going to be around this side, right? Or around this side. So I'm going to basically have 2 points of interest where I'll be expecting market to respect and go back up, right? It looks like market is currently respecting this side. I'm going to go to a 1 hour time frame to take my entries. On the 1 hour time frame, I'm also seeing the same structure forming on the 1 hour time frame. Market is basically respecting this side because we had a break of structure what? Around this level. And market is respecting this other block that we have right here. So we can potentially have an up move right from this side, and we will only risk 1 pip, right? This is about 1 pip. Yeah, only 1 pip. So we just risk 1 pip at this side. Even if this should hit our stop loss, we only risk what? 1 pip. We could get another entry from this side or from this side. So 1 pip, 2, 3, we only risk what? About, let's say, 5 pips max, right? And then our take profit is always gonna be on top of this side because we expect a massive move from this side.